and welcome to Money, 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 your weekly personal finance date with me, Surabhi Upadhyay. Budget 2018 is upon us, and like every year, investors and savers like you and me are hoping for some good news from the finance minister. However, let's face it, limited government finances are a reality, as is the need to incentivize the right sort of financial products. So, what can Budget 2018 have in store for us from a taxation standpoint, from an investment and an insurance standpoint? Well, here's a curtain raiser to the big event, and over the next 20-odd minutes, we will prep you up with everything that you need to know. Joining me on the show are Mayur Shah, Executive Director, Tax and Regulatory Services, EY, Ashish Shanker, Head of Investment Advisory at Motilal Oswal Private Wealth Management, as well as Ashish Shanker, co-founder and CEO of PolicyBazaar.com. Ashish is going to be joining us in just a bit. Well, gentlemen, great to be talking to you. Thanks for joining in. It's that typical time when we start our conversation, wondering what, we can look out for on the 1st of February. So, Mr. Shah, I'm going to start with you. Everybody is wondering, ATC, will limit be increased or not? Tax slabs, will there be any changes or not? What's your sense?
So my sense is that, tax slabs would not change, except, there is a gap between 5% and 20%. And I believe there will be some tweaking which will happen over there, so that you have some intermediary rate as well coming in. Because they abolished the 10%. The 10% rate.
Slashed it to 5% last time.
That's right. Yeah. And my expectation is that yes, ATC limit should be increased, but it will increase up to 2 lakh, not materially high, but certainly that they have to do it, because the small investor, given that inflation which would have taken place, I think there is some leeway which needs to be given, and especially when you want to promote saving for people, and this is the only way they can promote saving. So I think we should look at something being took there as well.
Okay. Ashish, opening thoughts. I mean, from an investor standpoint, people who are putting in money in mutual funds, it's been a phenomenal year, right? Because flows have been increasing, wealth has been created. So is the budget an important event for an ordinary investor like yourself or me? Or do you think that this wealth creation journey is simply going to continue throughout 2018, irrespective?
See, I think, this government has taken for the liberalization program further. I mean, they've done massive changes over the last 3 years. And entrepreneurs are very, very excited about the future. So even if, they keep a status quo, because, a lot of the big changes have already happened. There is very little control left in the government's hands in the budget. So I think even if there is a status quo, investors will be very, very happy. I mean, companies are looking good. I mean, for the first time, you're seeing green shoots of recovery. So from an equity market point of view, I think we are very, very well placed. So a status quo itself will be very good for us.
Okay. Having said that, of course, as always, there are still expectations. Even the mutual fund industry has a lot of expectations. There are certain tweaks that they're looking out for. We'll go over all of them bit by bit. But to start off with, let's just go over some of the taxation changes that people are really hoping for this time around. So, the ATC limit, Mayur, it's, 1.5 lakhs, which continues. And, different lobbies are clamoring for different things. I mean, we'll talk about insurance in a bit. They want their separate carve-out, etc. But are you expecting any further tax relief? And if yes, which is the section where perhaps we are most likely to see it? Additional tax reductions.
Yes, so my sense is that, yes, now medical cost is climbing up. Probably, deductions for medical insurance will increase. The other thing is that government is likely to focus on retirement plans or retirement savings, wherein, they may tweak provision in relation to NPS, where they may enhance the limit over there as well.
Above the additional 50,000 that we are
Instead
getting?
of 50,000, they may make it 1 lakh.
Oh, that would be a huge bonanza suddenly for people looking at retirement planning.
Correct, because I think that's the focus area which I foresee. And for salaried employee, they may come up with the standard deductions once again, which has been done away with.
And how much of a deduction would you expect, compared to the limits that prevailed earlier? And that was a long time ago. Standard deduction.
That was around 1,000 rupees, which was there earlier, which was hiked up to 20,000. But I believe now it will be around 30,000 and somewhere near to that.
That will make people very, very happy, including, of course, yours truly. But Ashish, your thoughts on this? The points that Mayur just raised, in case there is further incentivization of NPS, Would that mean sort of competition and maybe bad news for mutual funds, or is there space and room for all?
Not really. In fact, the Mutual Fund Association has made a representation to the Finance Ministry to include these pension plans which mutual funds have also to be part of NPS. So if that happens, it will be a big booster from a long-term savings point of view. Because if you look at the monthly SIP amounts, I mean, they are crossing 6,000 crores now, which is a very, very good sign, because these are stable flows. And last year itself, we saw the domestic investors putting in almost 1 lakh crores into funds, and FIIs were 55,000 crores. So we saw domestic investors outstripping FIIs in terms of flows. So if this happens, it will give a further boost to domestic savings. Because, you know, India is going to save a lot over the next 2 to 3 years. So depending on how the government can channelize these savings, these can really be used for long-term infrastructure building in India.
Okay, all right. Well, we'll have to take a quick break on that note, but we widen the scope of the conversation after the break. We also talk about insurance, because the insurance sector feels that there should be a separate carve-out for the premiums that you're paying, particularly on life insurance. We'll get you all the details on the other side. Welcome back. You're watching Money, 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 and this is the pre-budget special. We are discussing what Budget 2018 could perhaps mean for your savings, your investments, and of course, those insurance policies that you need to buy. In fact, on that note, let me introduce our next guest on the show, Ashish Shanker, who is the co-founder and CEO of PolicyBazaar.com. Ashish, good to have you on the show. Thanks for joining in. Basic question to begin with, what are you expecting from the Finance Minister?
Yeah, we are hoping that, you know, India is a hugely under-penetrated country in terms of pure life insurance. And what we are hoping is that there is a special category created for pure life insurance. Maybe it's 10,000 rupees or 20,000 rupees, which is tax-free. And this is a very legitimate demand and requirement, because we already have a 1.5 lakh rupee category for life insurance under ATC, but you know, the products that get purchased there are not really life insurance. They are, you know, a very minimalistic life insurance, and everything else is just investment. So there isn't any differentiation for pure life insurance, and very few people. We have one of the lowest, you know, sum assured to GDP ratios in the world. Whichever stat you look at, we've got very low penetration of pure life insurance. And I think a 10,000 rupee category would provide the much needed impetus to get this category going, which is some incentive for consumers to start buying life insurance, which, you know, otherwise they wouldn't.
Yeah, Ashish, I couldn't agree more. I mean, absolutely. Pure life insurance is something that needs to be a starting point. And, you know, perhaps there is merit in looking at a carve-out. But let me ask you this. I mean, also the government has limited finances, right? So, you know, if they are to balance this out, then would you or would the insurance industry be okay if ULIPs are taken out of the ATC category and the deduction is offered to just pure life insurance, pure term plans? Is that something that's palatable?
I would love that, but my point is I don't want to suggest something which has zero acceptance. It will be zero acceptance because it will hurt the insurance industry quite poorly, right? And I can't be the lone voice who will be heard and everybody else would not be heard. Which is why, see, I don't think a 10,000 rupee exemption in any way, shape or form affects the taxes too much. What would be a better compromise here? You have a 1.5 lakh rupee limit, right? Why don't you make that 1.35 lakhs and keep 15,000 only for term insurance? It's not a big amount. We already have 35,000 for health insurance. So, what is the reason that you have it for pure health insurance but not life insurance? And also, since you said this, I think it would make sense to exclude investment-based schemes on health insurance from the 35,000 that you get as tax break on health insurance, because essentially what we are seeing is the misuse of the tax exemption by investment-based schemes with minimalistic insurance, and that was I hope that was never the idea of the government.
You know, actually, I wanted to come to health insurance separately, and I couldn't agree more, because the whole idea of incentivizing certain products are that these are important financial products. It's not to really help a particular industry, whether it's insurance or mutual funds. It's because these are important products for us as investors and savers, and, you know, pure risk products definitely are topping that list. On health insurance, do you feel that there is a need to enhance the current limits? It's 25,000 for self and 30,000 for, senior citizen parents. So looking at the current premium rates, are the limits okay, or would you sort of lobby for an enhancement?
My suggestion here, of course it's a suggestion, would be whoever buys how much ever health insurance or life insurance. See, they will only buy as a part of their income, right? And that means they are paying taxes already. Exempt the whole thing. As long as it is pure health insurance and pure life insurance. Let it be whatever. Why are we getting into... Because let me answer it another way. The 20,000 and the 35,000 is enough from one perspective, that 95% of policies are cheaper than that today. 95% of customers, even on a platform like ours, the average ticket size is about 13,000 rupees for health insurance, right? So 95% of policies are below the limits that are there today. But for somebody, the limit may be higher. Now, just because I am a diabetic and the cost of health insurance for me is suppose going to be double and it's going to be 26,000 rupees, why take away the tax? All I'm saying is this is not what you take the tax exemption away from. This is what you give it for. You can almost have limitless for pure life. But I'm mentioning again, keep it for pure health insurance, pure risk only.
Absolutely.
Pure life insurance and pure health insurance.
Couldn't.
Let not people take advantage of government schemes by kind of peddling investment schemes in the garb of risk.
Sure.
But again, I would limit my view there again because it's an industry piece and the entire industry would not appreciate if that went away.
Sure.
The industry runs on that tax break for investment.
Couldn't agree more, Ashish. I really couldn't agree more because from a pure consumer standpoint, I think these are the most important kind of insurance products and they perhaps really deserve the incentives and the tax deductions. Last question to you. We know you have to rush. But we were just discussing this, NPS earlier and different sort of pension schemes. From what I hear, the industry is really lobbying for parity between NPS and other pension products that the insurance insurers are offering. Your views on the same?
See, my view is you should have parity in all formats of schemes, otherwise it causes arbitrage. We're not here to cause arbitrage. We're not here to play one against the other, right? It is not that just because something is called an NPA and something is called a pension scheme and something is called an investment scheme, they should be different. According to me, and I think these complexities are the ones that cause most of the problems, we should just have a standard scheme. Everybody is allowed to invest something for their long-term pension, and and the reason we're doing it for pensions is because they follow a certain pattern. Only so much money can be withdrawn after a certain amount of time, etc., etc. And hence, we support long-term savings and pension planning through some tax incentivization. It should be the same for all pension plans. Whether those pension plans come from a mutual fund industry or a life insurance industry or from an NPA, it's only logical. But I would still say the bigger issue is still risk-based protection. And let me also say one more thing very quietly. You won't hear too many voices from the industry asking for risk-based protection. So, when somebody does ask, you have to really listen hard to them because at least some forces are trying to get risk-based protection into the market.
Absolutely.
So, if you ask the industry for their top demands, I don't think risk-based protection would come in the top demands at all.
I'm going to definitely take this up, and I think it merits a different debate altogether on a different edition of Money, Money, Money. Insurance, that mix between investment and protection or pure protection. I think it's a great conversation to have later, but thank you very much for joining us on the show today. Ashish, I'm going to take this forward with you. I mean, the point that he was making specifically on pension, because the insurance industry also wants a similar treatment. You just mentioned mutual funds wanting the same additional 50,000 deduction. So again, a lot of competition then for funds, and what does it mean for the end insurance buyer or investor?
So look, I mean, I am also a big proponent of parity. I mean, let them also, manage pension schemes. But like he said, just to take off on the other point, I think, the primary purpose of an insurance company is to insure risk, right? And we've been big proponents, at least, most investment advisors, that you buy your risk cover separately and you give your investment money to the investment specialist, which is mutual funds. So I'll be more than happy if this, exemption is granted to the MF industry and the insurance industry at the same time. But taking a cue from him, I think the MF industry is probably far better positioned to manage your long-term investments.
Sure. Okay. So your thoughts on this, now that we're talking about having taxation parity between a lot of these very critical products, whether it's pension, whether it's retirement, between the mutual fund sector and insurance and a government-run scheme like the NPS?
So I mean, I would agree with Mr. Daya that I think something should be offered for only for risk cover.
Okay.
Because that's where people will get used to not only saving thing but managing their own risk as well. But I wouldn't agree let's take out something from 8IC or other and then give it to them.
Yeah.
Because then we are not even encouraging saving. We are saying now instead of saving you just move to risk cover, which may not be appropriate from that point of view. So if you want to build in some social security system in place, then it has to be in addition to what is there today.
Okay, so don't touch 1,50,000. Try and give incentives over and above that.
Yeah, that's true. Yeah.
All right, quick break on that note, but the conversation continues on the other side. Lots of other important changes that are being spoken of as well. Is there going to be a change in the manner in which dividends are taxed? What about this big bogey on LTCG? Can that do anything to derail your investments and your savings plans? We'll talk about that on the other side. Welcome back. Here with Money, 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 and this is the pre-budget special. We are discussing the possible changes that the finance minister perhaps could think of that make you and me, the investors and savers, really, really happy. Now, Ashish, I just want to get back to mutual funds and talk about any additional changes that could be required. I mean, one request that we hear year after year is to introduce a concept of DLSS, debt-linked saving schemes, which are incentivized with deductions. So, do you think that's a fair demand?
Absolutely, because see, you already have an ELSS scheme, which is an equity-linked savings schemes. All that the industry is saying is extended to debt as well. And they could put conditions like this money should go to infrastructure funding and so on and so forth. But it will just help, deepen the corporate bond market. And you could also utilize this money for long-term infrastructure spending. And the terms could be similar, that this money gets locked in for 3 years. So I think, if this is done, it will be good for the development of the debt markets as well as for the mutual fund industry, because don't forget, out of the 22 lakh crores or money that the mutual fund industry manages, almost 14 lakh crores is in debt funds. So there are a lot of investors out there who are also looking to substitute their debt investments through mutual funds.
The other interesting demand that seems to be being made by mutual funds is the definition of hybrid and whether the hybrid fund is going to be an equity fund or not.
Right.
I think right now it's 65%, right? As long as it's investing 65% of the corpus in equity, it's treated like an equity fund.
Right. So this really applies to balanced funds. Today when an investor is putting money in balanced fund, per force a fund manager buys about 70% into equities. And there is no scientific reason for it. The only reason is that from a taxation point of view, you're treated as equity if you do more than 65%. But really, if you're a balanced investor, you want that the fund manager should have the flexibility of maybe putting about 50-55% in equity. So all that the industry is demanding is that you make that 65% down to 50%.
Okay, fair enough. Mr. Shah, I want to come down to now some of the most contentious issues around the budget, like almost all years. Long-term capital gains. Everybody is wondering what's going to happen, because last time we saw the definition, change for property. Instead of 3 years, the holding period was brought forward to 2 years. Are you expecting any further tinkering on long-term capital gains, either for equity, listed, unlisted, or any other asset class for that matter?
Yeah, so there are two propositions which I've been seeing happening. Is either to introduce capital gain tax on listed securities, which is currently exempt from tax, or the holding period for listed security from 1 year should go up to 2 years. My expectation is that the later one should prevail. Otherwise, it will impact all the investor, and whatever benefit which has been given so far will have an impact on the entire market.
Well, we're coming down to last thoughts, running out of time on the show. So let me get your final takeaway. Any other suggestions, expectations that you'd like to leave us with? And a word on dividends, because last year, those who are getting very hefty dividends, above 10 lakhs, they had to get used to paying tax, which is 10%.
That's right.
I don't know, should we be worried? I mean, smaller investors as well, that maybe there'll be some element of taxation on dividends? I
think in dividend, there are a couple of anomalies which are there, that, if you have a multiple layer of holding, in that situation, at a first year, there is no dividend distribution tax, but on a going forward basis, there is no clarity in terms of, second or third year, whether it will suffer dividend distribution tax or not. I think again, we should go back to the old regime in terms of do away with dividend distribution tax and let it be taxed in the hands of each individuals, so that it really doesn't tinker anything much bigger than. That's the expectation which I would have.
Okay.
Yeah.
All right. Ashish, final thoughts, any, advice, request, expectations that you'd like to put on the table with respect to the budget?
Yeah, so I think, one of the things you spoke about, the long-term capital gains issue, my sense is, if they extend it to 2 years, I think investors will take it in their stride, because a lot of expectation building has already happened, and, people are expecting some kind of tinkering to happen in that area. But if they say 2 years and, if capital gains are still exempt, I think it'll be a positive. The other area of anomaly, which I don't know whether they'll correct it in this budget, but I think if they do it, it'll be good, which is the debt funds. I mean, they had made the debt funds, for it to be a capital asset from one